As we look at 2026, what are some of the things that from an investment advisory committee organization we're looking at paying attention to from an investment opportunity perspective? What are you seeing in there? What are we really kind of focusing on, do you think?
Yeah, it's interesting that you bring that up, Craig, because I think a lot of people have not felt great about what's going on. And the underlying data has been very different than what I would even say is consumer sentiment.
Right.
So as we look at the coming year, the placement of our portfolios, what I love is we go in with a thought process and then we pivot throughout the year, depending on what happens and things that go on in the economy. There's really 5 things that we're looking at key, as if you want to look at kind of key performance indicators going into next year. The first, private investment trends. So private investment always starts the cycle. Where is private investment going? And then it filters its way up. The second, labor participation rate and wage data. So we're starting to get some information that obviously inflation is cooling. Wages are starting to outpace inflation a little bit, which is we haven't had happen for a long time. That's really important. The other one that's really key is small business confidence. 50% of the GDP is generally delivered by small businesses. It drives the economy. It drives the economy. And so how is small business confidence? So that becomes a very important key indicator that we look at. The other one, which is starting to become less impactful, which I love because it seems like all of 2025 we talked about it, but is inflation versus Fed expectation, right? How is inflation versus the targeted 2% rate? We're starting to see the inflation data come back down. I hope we can have another conversation about that. It would be great if we didn't have to talk about inflation for a long time. It would be great. And then obviously one that was pretty topical early in the year, and then it smoothed its way out. We didn't talk a lot about, but it's coming back is geopolitical risk.
Oh, you're right.
Right. When we started 2025, we talked a lot about certain wars that were going on, conflicts, all of these different issues. A lot of that settled. And as we've gotten close to the end of this year, it's starting to raise its ugly head again. And I think you're going to have that in all cycles, specifically with a very dynamic globe. A lot of different philosophical ideas out there on how their economy should run and things of that nature. So, but those are the 5 key things. I have a positive outlook as we go to 2026. I think there's a lot of things that could happen that could stimulate the economy, lowering interest rates, high levels of tax returns, job data being really good as far as people aren't quitting their jobs like they were before. So I think there's a lot of forward indicators, but we have to be cautious.
That's right.
And we have to be intentional where we go.
Well, and I love the fact, and we do this every year, where we have a direction, to your point, we have a strategy. One of the things I appreciate about our team, and I think it's bode very well here over the last several years, is we remain nimble, we remain flexible, and we will pivot where we need to pivot.
That's right. And I think it's important to kind of wipe out the noise and really look at the data.
Look at the data.
You got to follow the data. That's what's critical. So if you'd like to learn more, check out prevailiws.com.